Good afternoon, everybody. This is Chris Frew with episode 49 of What's the Buzz? This is our thought leadership interview series where we get to talk to ecosystem builders around the country that are helping to build life science ecosystems. For us, that's anything from site heads who are launching and building a new facility that impacts the region to membership communities, incubators, or investors who have ties to their local region. Like today, I'm excited to talk with you today, Ben Scruggs, executive partner at Hatteras Venture Partners. So welcome.
Thanks, Chris. It's great to be here. Excited to chat.
Yeah, likewise. Well, before we jump in and I put you on the hot seat, Ben, let me take care of a couple of housekeeping items. So for those of you who are just joining, BioBuzz is a regional-based ecosystem building platform. So we wake up every day thinking about three things. One, storytelling to make sure that we can tell the stories that are happening that you care about to help break silos and connect the ecosystem. Programming and events. We have our thought leadership series, which I'm excited. Ben and I were talking earlier, where we are bringing to North Carolina this year, which is an 8-part series focused on industry leadership and thought leadership in a region. And then workforce. So workforce is part of how we started, and we wake up thinking about that every day. We have a platform that you can join as a member, and later this year we're going to be launching a really unique talent marketplace for the life sciences ecosystem. So I encourage you to join and get in now, early in that. And a special thanks to our sponsors. So I always say our sponsor, Ben, is like literally an ecosystem builder. So if you're not familiar with Heffron and Company, they're a 104-year-old mechanical engineering and plumbing contractor and service provider for life sciences is where they specialize in. Built some of the most iconic buildings in the Maryland, Virginia region, including Human Genome Sciences, which was kind of like one of the early pillars in the Maryland community. So a special thank you to the team at Heffron. They're incredible to work with, highly trusted, and I see the project from start to well beyond the finish. So appreciate their support. And actually, Ben, part of their support this year is actually going to expanding BioBuzz into North Carolina. So we can thank them for that as well. So today we're talking to Ben Scruggs. We called today's episode From the Triangle to the Summit, which we can unpack on why that is. But I want to give Ben an opportunity to introduce himself. With Hatteras. Hatteras is based in North Carolina, and has been a big part of the ecosystem for many decades. So Ben, you want to take a second just to give you a quick introduction and tell us a little bit about Hatteras?
Yeah, sure. Happy to. Thanks, Chris. It's great to be here to talk about the ecosystem in RTP, what we're doing at Hatteras related to that. I've been in the Triangle for over a dozen years at this point. My background's as a research scientist. I came here to do my postdoc, and it's a great life science ecosystem that has really had stickiness for me, and I think that's the pattern that a lot of people follow, but was actually really fortunate to jump directly from my academic career. Background is as a cell biologist, and jumped into the world of venture. Was fortunate to meet the Hatteras team directly from academia, and sort of jumped in on the technical side of things. That was close to 10 years ago at this point. Really focused on technical aspects of what we do in human healthcare, can unpack what we do as a firm, but have really evolved from just doing technical analysis to being involved broadly across our portfolio. So I work largely on the biotech side of our portfolio, do some investments in tools-related companies as well. Over time, I've spent directly working within portfolio companies. I've run strategic initiatives for a company that came out of Duke called Tune Therapeutics in the epi editing space. I'm currently running one of our portfolio companies that came out of UNC that's working in the organoid model system space called Altus Biosystems. And from there, it's really been just working with a lot of different companies that are all coming from the early stage. So that's what we do as investors at Hatteras, is we are seed and early stage investors in all things related to human healthcare. So we see ourselves as investors in really 3 different pillars. That's biotech, medtech, health tech that touches human healthcare. That's relevant to what we do. Big influence because Or in the Triangle, where there's great academic science that happens from the universities like UNC, Duke, NC State. We have a lot of med schools here, along with Wake Forest, just 30 miles down the road. Those aspects have a big influence on us working with academic founders. So often we see ourselves as first checks in, but we invest everywhere throughout the United States, but healthcare is our main focus. So that's the quick rundown on us.
We were talking about that before. So your investment portfolio is broad, right? A couple three key areas, but you do invest, beyond the Triangle. But you guys have roots in the Triangle, right? Like, yeah. There's some core roots there, and clearly tied in with a lot of the startups emerging.
Yeah. So Firm's been around for 25 years, and definitely part of the roots have a lot to do with the state of North Carolina. Definitely the state pension fund over time is one of our big backers, and having connections to economic development has had a big impact on how we think about the state, and the ways that we're directly investing in companies coming out of the universities. So a lot of this is capital that's coming from different institutes that are on the ground here and trying to continue to fuel economic development.
Yeah. So I always like to make sure people understand like who we're talking to and kind of your background. So especially with investors who have a couple different arms to them. So you have your Fund VII, which just launched. Congratulations about that. That was last year, and again, last year was a big year for you in general. So I'd love for you to kind of like help lesson why last year was such an awesome year for you. But so maybe you could talk a little about how you have the Fund VII, but then you also have a couple funds that are tied more, economic development funds, right? So could you maybe unpack a little bit of that, and then I'd love for you to dovetail that into, again, like, let's talk about the exciting stuff. Why last year was pretty exciting.
Yeah. So actually, I'm happy to start there. So last year, as I mentioned, 25th anniversary of the firm. So a big milestone for any firm to have that amount of time. So 25th anniversary, we made our 100th investment last year. So kind of a milestone for us, to 25 years, 100 portfolio companies over that period of time. We also raised our 7th fund, and simultaneously, in addition to raising our 7th fund in an environment that's been difficult, not just for early stage companies, but also venture firms to raise capital, we raised that. It's about $177 million vehicle for Fund VII, and simultaneously raised an opportunity fund. So that's roughly another 30 million on top of that. So about 200 million in capital that we can deploy through those vehicles. So very active in the investment ecosystem, from having dry powder to be able to deploy. And we've been doing that through our core fund, and that's really what I'm describing of across all those different pillars, and that's truly a national focus of everything in North America is fair game for us. At the same time, we've always had a mindset of trying to be a leader in the Southeast, certainly in North Carolina. We love to be able to see the things that are in our backyard. There's a lot of great science that happens here. That's had a big influence on us, and has continued to have a strategic focus for us in terms of these affiliated funds that we've worked with. So currently there are a few funds that we have direct relationships with. We call one of those the Pisgah Fund. So that is a fund that is really based on economic development in the western part of the state. So Asheville, the surrounding areas. It's capital that's deployed from HCA and from Dogwood Health. So those two are really the anchors of that fund, with the idea of those healthcare systems directly intersect with our strategic focus at Hatteras. And so from that standpoint, it made a lot of sense for us to be a fund manager, and also tie that to being able to do investments in fueling job creation that happens in Western North Carolina. Similarly, in some ways, there's an affiliated fund that we have for Wake Med. So again, thinking of hospital systems, healthcare systems, how we can interface with them. Wake Med has been a good strategic relationship for us. And so with Wake Med as a backer, that's been a dedicated fund of trying to look for innovations in that hospital system that can really be early stage, and also having those relationships with healthcare providers, getting their specific feedback on technologies has been a wonderful relationship to have. And so that was similarly synergistic with some of our core focus at Hatteras. And then maybe the last one that's worth mentioning, one that I've directly been a manager of, is a UNC dedicated fund called Carolina Research Ventures. The idea here is that technologies that are coming specifically from UNC, we can invest in those. Often things that are coming directly out of the university, sort of first check in, trying to help get things out of the university and into a startup ecosystem is what we've been doing there. And that was fueled from probably doing 13, 14 investments out of UNC companies over time, and formalizing that relationship into a dedicated fund to help get companies off the ground. So all of those have a slightly different flavor, but they're all special vehicles that we've managed that intersect largely. It's the same team, that our core Hatteras team is managing all of those, and there's a lot of overlap. And when you look at the portfolios of each of those individual funds, some of those have become co-investments in our main funds as well. So that's been a really nice relationship to have.
Yeah, I appreciate you you sharing that and breaking that down. I mean, on how the organizations operates, but it sounds like a matrix. So everyone still is touching the, regardless what fund it comes under, you're getting the Hatteras team to around it. It's interesting. You mentioned how challenging the environment's been for VCs as well as, and we know the startups as well, but ventures, it's had a share of struggles too. Are there some things that you're doing that are helping to, with your strategy? When I hear you speak, I mean, plugging into the ecosystem, having these feeder systems, being really connected to the executives and to the fund. These to me seems like all things that help de-risk your decisions and de-risk your how you can evaluate an opportunity versus a fund who might be flying in and kind of looking at deals, that sort of thing. I mean, did I get that right? Is there anything else you can unpack there on kind of how you de-risk and how you support kind of the early investing you do?
Yeah, I mean, I think it's a fair point of certainly always trying to mitigate different aspects of the portfolio, whether that is building relationships with people over extended periods of time. Certainly, it can be a multi-month, if not multi-year process of truly getting to know people. And even though we're investing in the world of science, you're investing in people, and that's an important aspect of things. And so thinking about the local ecosystem or relationships nationally as well, I think that's a key aspect of it. But thinking about our portfolio, risk mitigation is a big aspect of that, of trying to mitigate in as many ways as possible. And it's part of why we have the different pillars that we have across the healthcare continuum, thinking about when there are ebbs and flows to biotech, that at some different points, medtech may not be on exactly the same cycle, or health tech may not be on exactly the same cycle. And so that allows us to have times when we're getting returns and exits, so that there's, at least a hope would certainly be that there is a continuous stream of positive momentum that's happening across the portfolio. And we've been fortunate to see that over the past several years.
Yeah, that makes sense, that diversification. Well, that was another part of last year's success, wasn't it, though? Like you guys had it, was it a medtech exit in HistoSonics?
Yeah, HistoSonics was definitely one of the wins that doesn't happen every day. So we were fortunate to have an exit, 16-year overnight success in many ways. So this was an early investment for us. This was a technology that came out of the University of Michigan. Fascinating technology. Love the science from the early days of being able to adjust the way that ultrasound frequency is used so that you can create cavitation. It was one of these long stories where early on the intended use for this was definitely not where the company is at this point, and we consider HistoSonic a tale of two lives in many ways, of being able to know that there was some fantastic technology there, but finding the right application for that. Then really fortunate at this point several years ago to grow the team, bring in a world-class CEO, Mike Blue, focus the company on oncology initially, and a lot of the team, investors were worried about what the implications of that could be, but found it to be really powerful, where you're truly able to ablate tumors and do that without having surgical resection, and it's potentially a truly transformative technology. The data has been amazing. Lots of patients who have shown real benefit from this. And so the company exited last year for $2.25 billion. And really interesting exit as well, in that certainly there were many strategics that were interested in this. Banks ready for a potential IPO on what to do with this. But the growth, the sales of these instruments has really been growing, and there was a party of investors who were willing to do a full buyout of the company, and that's what we ended up doing, was an exit to investors who could keep the company private, and from the investment standpoint could exit our position or roll forward a part of what we were able to do. Is really a creative opportunity, and really beneficial, so that old funds like ours and some of the others that had been supporting this for some period of time had the opportunity to realize something out of it, and the company could continue to execute on this. And at this point, liver cancer, but seeing where this can go for other indications in oncology is really exciting. It's a phenomenal technology.
Yeah, that's great. Yeah, that sounds like I was reading up on it just this weekend while we were prepping for today's call, and again, like you said, like those $2 billion exits don't come around often, so it's nice to be able to kind of celebrate that.
Yeah.
And you mentioned creative too. Like when I think about the venture landscape too, like you've seen a lot more creativity, because of, like, I guess the challenges. Like, what are some of the things that you guys are thinking about creatively? Is there anything that you're looking at that is new ways of looking at either exiting or at investments these days?
Yeah, I mean, I think companies, investors, the whole ecosystem has to be thinking creatively. I think that this type of structured private sale is not something that can happen for every opportunity. Thinking about ways that there might be ways to create vehicles like that is really interesting. I think on the early investment side, a lot of what we've been doing is generally the same. I think we've tried to stay really disciplined on dollars into an initial investment. I think the other aspect that we've focused on more than ever is co-investing early on, mitigating risk, but thinking about it from the perspective of ensuring that there's sufficient capital around the table for follow-on investments, and not going it alone as often. And that has been something that we've had to be really disciplined about, in terms of making sure that we have the right partners, and sometimes that's trusted partners that we've worked with in the past. But just knowing that companies can get to where they need to be is definitely been top of mind for us.
Yeah, that's important, especially how it's taken a lot longer for some of these companies to get to, or like the data points that for that next investment have been pushed out. So
Yeah.
somebody said, keep your investments close and your syndicates closer.
Yeah.
But so that makes sense, making sure the right people are around the table with you. When you think about that in the Southeast, what's the landscape like? And I guess do you see it growing? Can you talk about that investment landscape? Because that is something that
Yeah.
I hear from quite a bit is like, we need more capital here, or we need the right capital. But you're on the ground. Talk us a little bit about that in the Carolina area.
Yeah, so I think that I'll echo the sentiment to start is that we need more capital in the Southeast broadly. We need more capital in RTP. I think there's definitely been some good momentum in what's happening here, seeing small firms pop up like Cape Fear Biocapital has been great to see get off the ground and trying to think about the initial investments, getting things off the ground. Other firms that have a presence here, but may not be really considering here to be headquarters is something that we've seen growing. So either a firm like KDT or others, there are a number of firms. I won't rattle off all the names, but those that have maybe a person on the ground here has been encouraging to see in terms of people who are paying attention to those early stage investments where it is useful to have a syndicate come together. That said, I think having a bigger number of firms that can write larger checks is still a gap that is needed in the ecosystem. I think we're seeing outside investors that are definitely paying attention to the high quality of science and company development that's happening here. But it's always going to be different when your boots on the ground versus trying to catch up on what's happening here. And that we certainly think that we have to communicate outward of what are the leading companies that are growing here. So that's a big priority for us. Our co-investor relationships, always exchanging deal flow from that perspective. And that will continue to be the case until we have more investors who are setting up shop and dedicating their time to this ecosystem.
Yeah. Yeah. I mean, that's storytelling. That's close to our heart, right? Like, making sure you can share that there's good deals here, there's things happening, not only that, but I think something that, we found the ecosystem coming down there so welcoming, and there's so many great committed partners, NC Life Sci and North Carolina Biotech Center. And there's groups that are really doing a great job of like really connecting and supporting and everything. So there's a really great, but I did hear it time and time again, like, we're too humble here in the South. Like, we need to tell our story better. And I hope that that's something we can help with. I mean, we're coming into the market and we're meeting a lot of people, this year. And again, the stories that I'm hearing are great. And some of the founders I've met are incredible. Some of them have moved from Bay Area or other areas to North Carolina. So that's something that I think we want to kind of, really tap into and help support, is some of those storytelling to show people there's really good talent here, and there's really good science, and there's really good technology.
Right. Yeah, it's been phenomenal to see. Certainly, there's definitely been a relocation of people who are coming from Bay Area or otherwise. Quality of life, cost of living, certainly advantages to being here. But seeing that migration of people has definitely been a change. I think there's also, in addition to science coming from the ground up out of the universities, there's always been a talent pool that was established from GSK, from going back to Glaxo, Burroughs Wellcome, that everything has existed from that standpoint, that things have a lot of people who've been really well trained from pharma, while we don't have that major pharma on the ground now. Filling that in some ways from United Therapeutics and AskBio we were talking about earlier. We have excellence in things like genetic medicines and companies that have built up. So it's really being able to have some of those people who have been able to rinse and repeat. It's not the same as what you would see in the large ecosystems like Boston and the Bay Area, but the gap in management talent is not what it once was. And so it's really exciting to see that development here.
Yeah, it's good to hear you say that as someone who's boots on the ground, because that we often see that in other markets. We're in the Baltimore market, for instance.
Yeah.
It's the management talent that people want. You can open up a lab in Boston if you need some research talent, but but where's the founding technology? Where's the founders? Is the right management talent around it to get it to the next inflection point? Yeah. Well, it sounds like things are progressing, and you all are doing your part to really kind of nurture the ecosystem. But it sounds like there is kind of an inflection point happening, and you are seeing, again, the Cape Fears, and I've met several other angels who are angel investing now that weren't 3 years ago. So that may be another thing that's kind of starting to activate more.
Yeah, I think that all of the aspects of trying to bridge the valley of death, there are a lot of different aspects of how to do that, especially in an environment where some of the non-dilutive funding tools that have existed have been challenging over the past year to 18 months. And so finding other ways, that's an aspect of creativity that's needed, especially from the startup environment, is finding ways to just be able to get that initial proof of concept or answer key questions, that killer experiment, go, no go decision. And it has been great to see more. And I think from the Hatteras perspective, we're leaning into that, of thinking more about ways to help be able to fuel that as well.
Yeah, I mean, from our talent arm, we've never done more fractional placements than we have in the past 2 years. I mean, and and people are getting really good executive and leadership talent, at a price that they can stretch the runway. So, well, again, we talked a lot about the triangle today, and again, being, we're new, that's on my mind a lot, but, I appreciate you sharing your story. Your story's kind of grounded there in the triangle, but recently your story took new heights, and I want to give you a chance to talk about the summit. You got back from Kilimanjaro recently, earlier this year. So I think that I have another partner up in Philly who went on that as well. Brad with Connor Strong and Buccalo, who's actually also a CAR T patient survivor too. So tell us a little about it. You went on the Timmerman Traverse this year. Could you take a couple minutes as we kind of wrap up? Tell us what that experience was like and just what that was all about.
Yeah, absolutely amazing experience. So the Timmerman Traverse is a group of biotech leaders, investors that is put together by Luke Timmerman, a biotech journalist based out of Seattle, really with the primary focus of fundraising for some really meaningful initiatives. And we were raising money for the Damon Runyon Cancer Research Foundation, which was certainly an initiative that resonated with me. Same idea that research funding there's never been a bigger need to support that than right now. As a research scientist, this type of initiative really resonated. I probably signed up for this way too quickly before thinking about what I was getting into. But we had a group of 20 people that all went to Tanzania together to climb tallest mountain in Africa. And the idea here was to try to raise $1 million. We raised 1.2, which fully funds 3 cancer researchers through their full fellowship sponsored by Damon Runyon, which has a just wonderful history of supporting some amazing research that's been done. So it's a great way to connect with other people who are all around the country, in the UK as well. So out of Boston, Seattle, Bay Area, San Diego, people from all over the place. And Brad and I had the chance to share a tent together for several days. You really get to know people well over an adventure like this. So it was an amazing experience for a really good cause, and definitely would recommend something like that to take people out of their comfort zone, and just see the peaks, the scenery, the people on the ground there, all incredibly inspiring.
That's incredible. Well, I commend you and I thank you for doing that to raise that money. Again, I think everybody has that opportunity to do something to make a difference. And said that's one creative way. It's pretty creative way to help fill the gap of funding these days. I'm just curious on a personal note, Ben, like after an experience like that, what's one or two of the kind of takeaways that you grew or you are kind of leaving that experience with?
Yeah, takeaways from that. Really, I mean, it puts a lot of things in perspective to step away, disconnect. I think for me, the aspect, I was really blown away by the culture. That was my first time in Africa, actually. But we had the most supportive, amazing crew on the ground there, so generous and supportive. And that was a big takeaway for me of, a community that largely has so little, relatively speaking, is willing to be so giving. It makes me think a lot about everything that we can do in our different roles and being able to contribute to our broader ecosystems and give back. So it's something that'll definitely stick with me for a long time.
That's incredible. Well, I'll put a link in our show notes so people can kind of, if they are interested, to see more about it. But yeah, I'm sure it was an incredible experience.
Yeah.
Well, thank you for taking a half an hour out of the time today to talk about all things investment and everything that's going on with Hatteras, and that you're doing not only in the Carolinas, their region, but also nationally for your portfolio. Again, I'm excited to see what 2026 has been, because 2025 was a pretty big year for me.
Got to find new ways to be creative and make things continue to grow.
Yeah, well, it sounds like you guys are working on it, so I really appreciate it. And I'll be down there more, so I hope to be able to see you and bump into you more than we have over the years. But it's been really good chatting with you today. And again, I'm excited about the year to come. I feel like we were talking earlier, like spring has sprung, and I'm like, all right, 2026 is here. We can think of more.
I have very, very positive feelings about what's ahead for our industry in 2026. I know there are a lot of people who are eager for things to turn toward the positive, but we've seen some early momentum in the broader industry, and I think continuing to do that is going to hopefully turn over some really nice data cards as we go through the rest of the year.
Yeah, indeed. I think we're all looking for those signals. Well, I appreciate it. For everybody tuning in, we'll put some links in the show notes here, more about Hatteras and about the Timmerman Traverse and some of the topics we talked about today. So I hope you tune back in next week. We were talking about this news earlier. Kilimanjaro announced a new CEO for the first time in 22 years, Evan Edwards, incredible executive, really great pedigree of a background, in combination products and biopharmaceuticals. So Stephen Perry, who Ben and I both know well, the founder of Kilimanjaro, is moving to the chairman, where he'll be working on strategy and probably working more with a lot of the vision ecosystem for where they'll be in the next 25 years. But Evan is going to be on the show talking about something that sounds like it's important to you guys, Ben, which is speed to market. Kilimanjaro has a tremendous reputation and a platform for really helping companies speed up through the early phase of product development and move into market faster. So I'm excited to dive in. Hope you tune in, Ben, to hear really kind of Evan's vision and what they're doing. It's such an inflection point in the industry right now. So I think that was part of their decision moving Evan into the CEO, really to support this kind of inflection that we're all seeing in the industry right now. So hope you all will tune in next week and with my conversation with Evan. And special thank you again to our sponsors, Heffron, for making these conversations possible. So until then, hope you all have a very successful rest of your week, and we'll talk to you next week. Thank you. Thanks again, Ben.
Thanks, Chris.